Vicky, I'm going to begin with you. What should investors do? We're seeing so much headline risk, so much volatility in the markets. Is there any safe haven any longer?
I mean, the safe haven is short T-bills. That's about it. As we saw, the intermediate and long end certainly sold off hard and did not provide the haven people thought. And gold has also been a little more volatile. So if you want absolute security, you're going the 1 year and under T-bills, your money markets. But for me, it's don't panic. We want to look at this market and say, over time, buying bear markets, buying this volatility has been a great way to make money in the long term. So for me, it's don't panic. Don't knee-jerk panic sell. The world is probably not ending. It does feel really terrible to be a human being. We're getting so many mixed messages. We're having, 8% intraday moves the last 2 days. So be patient. Don't get tricked into thinking it. The last 2 days, we've had these kind of false rallies, right? That, oh my gosh, it's all in. We're going to have tariffs rolled back. I got to hop on board. So be a little bit patient. We're getting jerked around. We are holding right now, and we're buying very slowly. I don't think we've seen the bottom yet, but we're starting to buy some of these things that have sold off hard that we still think have value, have protective earnings, and really strong balance sheets to overcome volatility.
Yeah, I think everybody's kind of over trying to call a bottom at this point. Rianne, I'm going to come over to you. We had a lot of people come on our air and say, when the tariffs were first announced, that board that a lot of people are making fun of now because of the formula, a lot of people said, well, this is worse than the worst case scenario. It seems like we've gone a well-traveled past that point. Right now, where can you put money to work outside of treasuries and short-term treasury? We had a number of people saying that. Is there anywhere to go in the equity market?
Absolutely. I mean, when we've seen a really substantial reset in valuations, in a really short amount of time. And so, if you've rebalanced, late last year, coming into this year and reduced some of those growth areas, now we've seen really significant pullbacks in technology and consumer discretionary, even in financials, in small caps. I mean, all of those now, especially, you look at small caps, they're trading, close to 30-year lows from a valuation perspective. It's, there are places that make sense to shift, rebalance back from, fixed income, which has had a positive return this year, and shift, incrementally into equities, just in standard rebalancing, buying into those hardest hit areas.
So, Rianne, I do have to ask you, I'm looking at the small caps right now. They're more than 25% off their 52-week high. They're obviously very economically sensitive to a potential U.S. slowdown or maybe even a recession. Why would you get into the small caps now with, I think, elevated recession risk?
It could take some time for this to play out, of course. And recession risk, our view is we're coming from a very strong place in the economy. With where we are with these tariffs, if they stay in effect, we could easily see a mild recession, but we don't anticipate seeing anything too significant. And right now, the market's hyper-focused on trade war risks. But when we move past that, we'll start to hear the narrative turn back towards deregulation and tax cuts, and that will all be supportive for small caps. But it's just hard when they're trading at levels like this. They are very attractive, and that is one area where we still want to add.
All right, you're not the only person making that argument or has made that argument over the last year, but it seems like the thesis is unwinding a bit. Vicky, I'm going to come back over to you. You gave us some potential safe haven plays. Walmart and Costco. I want to ask you, you don't see China risk in those two stocks? I mean, we've had a lot of people come on and say, well, Walmart and Costco, they aren't that exposed, but they certainly do have some exposure. They also have exposure to consumer sentiment and economic slowdown.
Look, you're looking for an anchor to wayward and everything's on fire, right? We're the little dog with the mug saying everything is fine right now as the world's on fire. They are going to weather things better than most. You're still going to have to buy groceries. You're still going to have to buy clothes. You're still going to have to buy basic necessities. And I think both of those provide the most value and bang for their buck. And they have diversified their supply chains. Walmart does claim 2/3 of their goods that they sell are made, manufactured, or put together in the United States or grown. And so I look at Walmart, I look at Costco. There's very strong and grocery, which I think, again, provides them the defensive posturing because, yes, we are worried about consumer spending. We may not see the big ticket items fly off the shelves and televisions and electronics, but you still got to eat. You're still going to have to buy clothes if they're falling apart. And those two, for me, are best positioned. You are trying to find something that right now there's not a lot of safety. And so for me, those two provide what I think is a historically defensive posturing in an area that has to have spending in grocery.
All right, coming up later today, we get Delta earnings. We've already had a earnings warning from Ed Bash, and he's already warned about the consumer. What impact potentially do you see these earnings having on the market? And of course, you have banks coming up as well.
Yeah, I'm a little bearish on earnings coming into it. I think Delta is just going to rip the Band-Aid off and say, hey, we're really worried, and reset expectations and lower growth once again. I don't think that would surprise anybody. You know, I think nobody's going to care about Q1, honestly. We're all going to be hyper-focused on what's the outlook, what's the guidance, are we going to see it? And I'm a little bit worried that earnings are going to be, you know, we call it taking out the trash, that their stocks are down, so let's go ahead and reset expectations extremely lower so we can beat it down the road. I don't think airlines are going to have anything good to say. And Delta has a lot of international routes. They've got a lot to China and Europe. I see them a little bit more exposed there. They're my top pick in the airline sector. I just wouldn't touch them right now because they're very exposed to consumer spending and currency.
So, Rhian, I'm going to give you the last word. We have some economic reports coming up later this week. Probably most importantly, CPI. Is that still a market mover, or is it the president and tariffs that have control of the market?
I think the narrative right now is really focused on president and tariffs. The tariff narrative is so important. There will be some movement around CPI likely, but a lot of that is backward looking, and we're not seeing the effects of the tariffs really weighing in yet. So I think some of that may be just kind of glossed over, and it'll depend more on what's really going on with tariff negotiations. And hopefully, you know, I think the market is looking for a reason to rebound. So if we start to see some trade deals materialize, I think that would be a positive.